Greetings, fellow investors. In today's video, we're going to be going over all of the mouth-watering, juicy dividends I received in the month of July 2020. So pretty cool. I just opened up the app and it actually says I'm up 4,800 in after hours and down 4,000. But that's not really true. What actually happened was they finally adjusted for the Apple and Tesla stock splits here. So it's kind of interesting ever seeing Apple this low. And now I own 32 shares. I had previously owned 8 shares. So it looks like they finally got that one going there. And also my average cost on Apple is now $57. And then Tesla, it looks like they also adjusted. Now you can only buy it for $443, which is pretty cool. Definitely beats buying it for $2,200 before. So now I own 5 shares of Tesla rather than just the one that I previously owned, and now apparently have an average cost of $289. So that's pretty cool for a company that has a market cap of $400 billion and a PE ratio of over 1,000. So I'm going to be holding on to both of those long term, but again, that's not the point of this video. Today, we're going to be talking all about dividends. And guys, I'm sure we've all been clocking in some countless hours at work, wishing we were spending more time with family and friends. At least I know I have been. And one day, this passive income that we earn from our investments, from our dividends, that's going to make it a reality where we can retire and spend more time doing what we love to do. As we slowly grow rich over time, please remember that this is the best kind of money, right? The money that I didn't need to lift a finger for other than scrolling up to confirm the stock purchase so long ago. So I make these videos every month going over my dividend growth investing journey and just the different thought process I go through when I'm buying and analyzing stocks. So be sure to hit that like button and subscribe, and we can continue to grow together. So before we get into every dividend I received in the month of July, I wanted to focus on a question I received about growth investing versus dividend investing. So Stock Ninja, shout out to him, asked a great question, which is, do you plan on having a growth portfolio on the side / separate account to complement the dividend one? So great question, Ninja. Really, until each maybe around $250,000 mark in Robinhood, I'm probably just going to keep adding to my Robinhood portfolio here. It's just really simple to do that. Keep all my investments in one place for the most part. And then also, it's very easy to share my journey here on YouTube. In terms of recording the screen and everything. Other brokerages, they don't allow you to do that. So Robinhood, very quick and easy to use. So I really like that feature. And then in terms of growth versus dividend, when I first started investing now about almost 3 years ago, I think I was so focused on not losing money compared to making money. Like if I bought a stock, my only concern was that it didn't go down in unrealized losses. And the only way I cared about making money was purely dividends and not capital appreciation. And that's totally fine for some investors. PPC Ian, that's really what his channel and his investing philosophy is based off of. But as I've matured a little bit more as an investor, I've seen that dividends, while they are a great form of passive income, but capital appreciation can be out of this world if you invest in a great company. And taking calculated risk, that's all part of investing. You're not always going to be hitting bullseyes, right? You're going to have some that veer off to the side and don't do as well. And that's all just part of the process. So I'm relatively young, so I should be focusing more on growth stocks. And just like anything in life, it's not one or the other, right? Having a mix of both dividend and growth, I think that's personally definitely the way to go. So yeah, I think in the future now, I'm going to be buying more stocks like Amazon. I'm going to be buying more stocks like Tesla and Nvidia, maybe even Google. So the first 3 I'd actually already bought a lot of this past month. So Google, definitely have my sights on that. And even an ETF like QQQ, this one has just been doing amazing. It concentrates on a lot of growth stocks here. Sure, the dividends, they might be small on a lot of these larger growth stocks, tech companies, but the returns of these companies has just been phenomenal. And I don't really see any signs of this slowing down. And honestly, I was really inspired by this YouTuber. His name is Trevor Hassel. He's even younger than I am, and he already has over a $200,000 portfolio because he invested so well with Tesla. He invested so well with Apple. I mean, that's more wealth than some people make in their entire lives, and he has made that at just 22. And it was made all possible by investing in a lot of great growth companies. And he's someone who worked as a waiter, and he just wanted to rock out with his band on the side. So he invested wisely, and he was patient, and good things did happen to him. But at the same time, though, I know markets, they don't always go up, right? So they have a little history of going down and trading sideways. But I think it's really funny. I got a comment on one of my videos saying, I don't own a single growth stock. And later he comically edited it to add the boring comment at the end, which I thought was super hilarious. So as you guys can see, my returns, they're usually on par with the S&P 500, right? If you guys go back to all of my earlier videos, I'm usually pretty transparent. So I'm either just beating the S&P 500 slightly or trailing it. Either one is pretty hard to do. And even being in striking distance of the S&P 500 is not easy. Not everybody can beat the market. Only a very select few, maybe even 1% of people can consistently beat the market or even get anywhere close. And I can assure you guys, there is nothing boring about all the growing amount of dividends that I get every month. And last time I actually cracked over $100 in passive dividend income for the first time. As for this past month, the month of July 2020, how much did I make in dividends? Well, let's go find out as soon as you hit that like button and subscribe to the channel. All right, guys, so I have my dividends here for the month of July pulled up. So a great phrase that I like to say and remind myself over and over again is buy, stash, collect cash, guys, on these great companies, and they will pay us for owning them. So first one here, we have SPHD. Actually, this is a continuation of June dividends, so I might say July, but I didn't actually count that one, and neither is the QILD one. That's really for June as well. So the first one is actually Coca-Cola here at $4.92. I owned 12 shares of Coke, and they paid out 41 cents a share. I actually just bought more Coca-Cola on Friday, so you guys can see here, just bought 4 more shares, $49.61. This is a great company, Dividend King here. Really as safe as you can get. I think so in this stock market, at least, with things being so overpriced. PE ratio of 22, 3.4 dividend yield, not too bad. Stable company. And then next dividend stock was Iron Mountain at just 62 cents. I only owned 1 share of them. This is one that I would probably like to sell off here, as I don't really see a long-term future with this particular stock in my portfolio. But in the meantime, I'll just hold on to it, collect dividends. And then Chubb, a lot of people talking about insurance these days, maybe not always in the best of light, but I own 3 shares of them, 78 cents a share, total of $2.34. Really no plans on buying more Chubb at this point, though I do think this is one of the industries that has not recovered from C19 levels here. So understandably, Chubb is an international company, so you will be paying a little bit more in that foreign tax. Then we move on to FedEx here at 65 cents. Also only own 1 share of this one. This is another company that actually has done very well here in the last 3 months. It's up 71%. So I always used to joke that this was a stock that just went down and down, but it may have finally reached its bottom, and it looks like things are finally looking back up for FedEx here. Almost back positive on this stock. I have held this stock very tough times here. At one point it was $90. So 52-week low, $88. Glad to see FedEx doing better here. Then we got Store, another one that I bought in the month of August here. 21 shares, pay out 35 cents a share for a total of $7.35. Then we got the monthly paying dividend company. And it's not reality income, as a lot of people commonly say, but it's actually pronounced realty income here. So they pay a monthly dividend right now, 23.3 cents a share. So I owned 10.05, and it paid out $2.35, which it actually reinvested into itself to buy 0.04 more of itself, which is pretty cool that it's accumulating and buying more of itself every month. So I know basically my monthly income is going to go up. All right, then we have the REIT, Medical Properties Trust here. They specialize in doing the real estate that medical facilities do business on. So that's a great recession-proof industry here. So I own 46 shares of them. They pay out 27 cents per share for a total of $12.42. So they only usually grow their dividend by like a penny each year. But right now, MPW is trading at a almost 6% dividend yield. And this is one that also hasn't super recovered from what it was to pre-C19 days. So I actually think this stock might be actually undervalued here. May add a few more shares eventually here. So Medical Properties Trust, glad to see that dividend income now be in the double digits. Then we have Medtronic at $4.06, owns 7 shares for 58 cents a share, and then they pay out $4.06. So Medtronic, another stock that's finally went back up. I'm finally in the green. I know my long-term viewers have seen this stock just plummet, and finally it goes back up. Like I've been saying this whole time, there's really no reason for a medical equipment supplier to be doing bad. It's just too essential for people to be able to live. And then we got QYLD. This is a monthly paying covered calls ETF. So this is a bit more high risk, high reward. 51 shares here, 51.16 or 17 to be more exact. They pay out 21 cents right now. And that's a total of just under $11. And then I have this set on DRIP, dividend reinvestment program, so it just continues to buy more and more of itself here. So this is a great ETF. Glad I own it here. Usually when stocks are close to an 11% yield, it's usually a major red flag, but I've made more videos going in more depth specifics of this ETF and why I think it's actually a safe investment. So just going to be continuing to buy this. My goal is to eventually get to 100 shares of QYLD, and that would be some pretty sweet dividends to get every month from them. So that's really going to be it for the July dividends, guys. So if you guys want to know the number, it was actually in July of 2020, I got paid $57.68, which is a 337% change from July 2019 when I only made $13.17. So it truly is amazing if I can somehow continue this year-over-year increase in 2021, but I wouldn't count on it. I also had 12 companies pay me this month, and for reference, this last tranche here in April, it paid me only $32.66. So some of the main drivers for this was, of course, QYLD. I didn't even own that ETF in April, and now it pays me $11. And of course, I bought a bunch more shares of Medical Properties Trust, so that went from $4 in April to now $12. So just keep going strong here, guys. Make smart choices. Get started investing. With money being printed out nonstop all day, every day, we just got to protect our money and make wise choices. So always consult your financial advisor before you do anything. But be sure to hit that like button, as it is the best way you can help me out. If you like this content, please interact with me in the comments. I love talking to people and sharing our thoughts and opinions on different stocks. And be sure to hit that subscribe button and cuss me out in the comments below. And one last time before we go here, say it with me, guys. Buy, stash, collect cash. That's how we do it here.